All right, let's kick off this deep dive. And today we're taking a look into the future of the U.S. housing market. We've got two really fascinating articles here. One's giving us a broad overview of the trends, and the other one, which was originally in Mandarin, is zeroing in on investment opportunities, especially for those folks interested in the stock market. So today we're going to break it all down, figure out what these experts are predicting, and hopefully by the end of it, you'll be able to, impress your friends at your next dinner party or something like that.
Sounds good to me. What I found really interesting was that both articles actually agree on a pretty key point, and that's that the next 5 years are probably going to see slower growth in the housing market, which I think is a pretty big shift from, the rapid pace we've seen recently.
Yeah, that's a good point. Okay, so let's dig into that a little bit. Both articles seem to point to mortgage rates as kind of the driving force behind everything. I mean, they
Oh,
basically control, buying and selling decisions for most
Yeah.
people, right?
absolutely. Yeah, they're a huge factor. And right now, those rates are kind of hovering between 6 and 7%, which is a pretty significant jump from where they were just a few years ago. So it's
I,
making both buyers and sellers, a little bit hesitant.
Yeah, like, is now the right time to jump in? Or should I wait?
Exactly.
Everyone seems to be kind of in this holding pattern, waiting to see what happens next. But what about the people who already own homes? A lot of them probably locked in much lower rates, a few years back.
Yeah, that's a really crucial point. You're totally right. The article actually mentioned that like almost 86% of current homeowners with mortgages, they've got rates below 6%.
yeah.
Think about it. If they were to sell right now and then try to buy a new place, they'd be looking at a much higher rate on their new loan. So it's no surprise that a lot of people are choosing to just stay put for the time being.
Right, it makes total sense. Like, why would you want to trade in that awesome low rate for something so much higher? But that must create kind of an interesting dynamic in the market, right?
Mhm.
Because if fewer existing homes are becoming available, that's got to ripple outward and affect everything else.
You're absolutely right. And that's exactly what the experts are predicting. This whole thing, they call it the lock-in effect. It's a key reason why, even though existing home sales are expected to, inch upwards a little bit over the next few years, they're still projected to stay below those pre-pandemic levels. Just not enough inventory.
So fewer homes for sale. That's got to create some serious competition for buyers out there. I mean, people still need to move, right? Like, life happens. People get new jobs, their families grow,
Uh,
they need more space or maybe less space.
Totally. And that's where things start to shift a bit. So with this shortage of existing homes on the market, the spotlight is turning towards new construction. Builders are really stepping in to try and fill that gap. They're trying to provide more choices for those people who are, really eager to buy.
Interesting. So is it kind of like a silver lining for buyers in a way? Like,
Mm.
if you're in the market for a new home right now, maybe going the new construction route is actually an advantage?
It could be. Yeah, I mean, think about it. Builders are offering all sorts of incentives these days. Things like mortgage rate buy downs to kind of help offset those higher interest rates, which is a pretty big draw for a lot of buyers. In fact, one of the articles even quoted Doug Bauer. He's the CEO of TriPoint Homes, and he's predicting a really strong spring selling season. So
Mm.
it seems like builders are pretty confident in their ability to meet this, this pent-up demand.
That's encouraging to hear.
Yeah.
But what about those challenges that we always hear about when it comes to new construction? Like, haven't there been issues with things like labor shortages and, the cost of materials skyrocketing?
Yeah, those challenges definitely haven't gone away completely. There's also the issue of land availability, finding suitable places to build. And then
Mhm.
there's the whole thing with changing building codes. Sometimes those changes can actually impact affordability, which, kind of defeats the purpose.
Right, right.
But it does seem like the industry is, they're working to navigate these hurdles. And the demand for new homes is definitely strong enough to keep things moving forward.
Okay, so we've got these rising mortgage rates, this slowdown in existing home sales, and new construction kind of picking up the slack. It sounds like a lot of moving parts.
Yeah.
But what about the real estate industry itself? Like, it feels like there's always something going on there, right? Always some new development or change.
Oh, absolutely. The real estate industry is always evolving, and there are some pretty significant shifts happening right now, especially when it comes to things like real estate commissions and how listings are shared. The whole industry is kind of undergoing a bit of a shakeup. Could have some pretty interesting consequences for both buyers and sellers.
Okay, now that sounds like something worth exploring.
Mm.
Lay it on me. What's going on?
Well, for starters, the National Association of Realtors, or NAR as it's known, they recently implemented some new rules about real estate commissions. And these changes are aimed at, increasing transparency for consumers and potentially lowering costs. especially for those folks in the luxury market.
Lower costs. Okay, I'm listening, but I'm sensing there's a but coming.
Well, there is a little bit of a but. See, these new rules are causing a bit of confusion and debate within the industry. Some folks are worried about potential legal challenges and how these regulations are actually going to be enforced in practice. It's created this kind of interesting situation where you see certain industry players taking proactive steps to try and navigate these changes.
Okay, like what? Give me an example.
Sure. So there's this guy, Leo Pareja. He's the CEO of XP Realty, and he's actually created a brand new listing form. And this form very clearly outlines the commission structure right from the get-go. It's like, here's what you're going to pay, no hidden surprises. It's a pretty interesting strategy, right? He's addressing the confusion head on and providing that transparency that the NAR is pushing for.
Yeah, that makes sense. Seems like you got to be willing to adapt in this business or you get left behind. But let's talk a little bit more about those changes to how listings are shared. One of the articles mentioned something called a clear cooperation policy.
Ah, yes, the CCP. It's basically this rule that the NAR introduced to try and ensure that all listings are shared on the multiple listing service, the MLS. The idea is to make sure that buyers have access to, the widest possible range of properties. So it's all about promoting a fairer, more transparent market for everybody.
Makes sense. So every listing has to be shared on the MLS now. Seems pretty straightforward.
Well, there is one little exception, and it's called office exclusive. And this allows some listings to remain private, which has stirred up a bit of controversy, to say the least.
Wait, hold on. So not all listings have to be shared. I'm a little confused. What's the reasoning behind that?
It's definitely a point of contention. Some people argue that this office exclusive exception kind of goes against the whole spirit of the CCP. Like it limits buyer choices and it hinders that market transparency they're trying to achieve. Leo Pareja, the guy we talked about earlier, he's not totally against the exception, but he does point out something really interesting. He says that refusing to share your listings, while at the same time using the MLS to find listings for your own clients, it can create kind of an uneven playing field and even erode trust in the system.
Yeah, I see his point. It seems like there's got to be a balance, right, between allowing some flexibility for brokers and ensuring that everyone is playing by the same rules.
Exactly. And this whole debate about how listings are shared really highlights a crucial aspect of the housing market, one that we often overlook: the total cost of ownership.
Ah, you mean like all those hidden costs that go beyond just the mortgage payment itself?
Exactly. It's so easy to get caught up in the excitement of buying a home, but it's crucial to consider all those ongoing expenses. Things like property taxes, insurance, maintenance, it can really add up.
You're telling me it's like this secret subscription fee for your house.
Haha, that's a great way to put it. And according to a recent study by Bankrate, these costs have been steadily creeping up. They found that the average annual variable costs for homeowners have jumped nearly 26% in just the past few years. That's over $18,000 per year for a typical single-family home.
Wow. Okay, that's a serious chunk of change.
Right.
So it seems like understanding those hidden costs is just as important as getting the good mortgage rate.
Couldn't agree more. And then on top of all that, don't forget about HOAs, homeowners associations. They're becoming more and more prevalent, which means you've got to factor in those monthly fees and any potential special assessments when you're thinking about your budget.
Right, because those HOA fees can really add up too. And you want to make sure you understand exactly what they cover and any restrictions they might have before you commit. Right.
Absolutely. Due diligence is so important when it comes to HOAs. You've got to carefully review those governing documents, budgets, reserve studies. You don't want any nasty surprises down the road.
Okay, so let's recap. We've got these rising mortgage rates. The existing home market is shifting. New construction is trying to fill the void. The real estate industry itself is going through some big shakeups. And we've got to remember that the total cost of ownership goes way beyond that initial price tag. It feels like a lot for anyone to consider, whether they're looking to enter the market or just trying to navigate the one we're in right now. So, what else is on the horizon? What do these articles have to say about the big picture?
Well, despite all these efforts to increase supply, boost new construction, and encourage people to sell, there's one challenge that just keeps looming large, and that is the persistent housing shortage. Both articles kind of point to this as a defining factor in the years to come.
Yeah, the infamous housing shortage.
Yeah.
It's like it's never going away. What's the outlook? Is it really that bad?
Unfortunately, yeah, it seems like the experts are predicting that this shortage is going to stick around throughout the entire 2020s. And they're estimating a potential pent-up demand of up to 4.5 million homes.
That's a mind-boggling number. What's fueling this shortage? Why can't we seem to build enough homes?
It's a combination of factors, really. There's limited land available in desirable areas. The construction industry is still facing labor shortages, and the cost of materials is still high. So it's this perfect storm of constraints that's making it really hard to build enough homes to meet the demand.
It sounds like even if we wanted to just, build our way out of this situation,
Hmm.
it wouldn't be easy.
Or quick.
You got to Experts are estimating that it could take until sometime between 2025 and 2030 to even start to address this pent-up demand. And then you've got to factor in changing demographics. After 2030, the level of demand could shift again, depending on, population growth and things like that.
So it's not just about building more homes. It's about building the right kind of homes in the right places at the right time. Okay, so we've got this national housing shortage playing out. But what about specific markets? The article in Mandarin mentioned some interesting regional trends, didn't it? It did. It pointed to a couple of emerging markets that are actually experiencing some pretty robust growth, specifically Florida and Texas.
Ah, yes, the Sunshine State and the Lone Star State.
Yeah.
What's driving their popularity? Why are people flocking to those places?
Well, for one thing, both states are seeing a huge influx of new residents and businesses, and that, of course, increases the demand for housing.
Makes sense. More people, more jobs, more need for places to live. Are there specific companies that are really thriving in these markets?
Absolutely, D.R. Horton. They're a major home builder, and they're seeing significant growth in both Florida and Texas. Their stock price has been reflecting that success. And then there's Lennar, another big player in the home building space. They're capitalizing on the growing demand for single-family rental homes in these states.
So they're riding the wave of migration towards warmer climates and those lower tax rates. But is it all about traditional single-family homes? Are there other sectors of the real estate market that are gaining traction?
That's a great question. And it leads us to another intriguing trend that the Mandarin article highlighted. We're actually seeing a pretty significant rise in senior housing and living communities as a real estate investment.
Interesting. So it's not just young families or first-time buyers who are shaping the market. This suggests that there's a much broader demographic shift happening that's influencing housing trends.
You got it. The aging population is creating this surge in demand for housing options that are specifically tailored to the needs of seniors. And this goes way beyond just traditional nursing homes. We're talking about a whole spectrum of options. Everything from independent living communities to assisted living facilities and everything in between.
So it's not just about providing a roof over their heads. It's about creating these really supportive and engaging living environments for a diverse range of seniors.
Exactly. And companies are definitely recognizing this growing demand. They're actively investing in this sector. For example, there's Amedisys. They're a leading provider of home health and hospice care, and they're expanding their presence in the senior housing market. Their stock price has been showing really positive growth. And even Lanner, the home builder we mentioned earlier, they're making substantial investments in senior housing communities. They're anticipating strong returns in the years to come.
Wow. It seems like senior housing is definitely a market to watch, both from a societal perspective and an investment standpoint. Are there any other emerging trends shaping the future of real estate? Anything else we should have on our radar?
Well, one thing that's becoming increasingly important is the emphasis on green building and smart home technologies. This is impacting both new construction and renovations.
That makes sense. Sustainability and tech integration are becoming so important across all industries. So it's only natural that they would influence housing trends as well.
Exactly. And for investors, this means keeping an eye on the companies that are at the forefront of these innovations.
Okay, so we've covered a lot of ground here. It seems like the housing market is at this really pivotal point with so many different factors at play. So what are some of the key takeaways for our listeners so far? What do they really need to know?
Well, I think the biggest takeaway is that the housing market over the next 5 years is going to be characterized by both challenges and opportunities. Mortgage rates, inventory levels, and this ongoing housing shortage are all going to continue to shape the landscape.
So how can our listeners prepare themselves? How can they navigate this really complex and constantly evolving market?
Well, the key is to stay informed. Pay attention to the trends that we've been discussing. Do your research, and be prepared to adapt your strategies based on the ever-changing dynamics of the market.
Knowledge is power, as they say.
Oh.
But beyond staying informed, what other practical advice would you give to those who are, out there trying to navigate this market?
Well, one thing I would say is don't be afraid to think outside the box when it comes to housing options. Explore those alternatives. We talked about ADUs, tiny homes, co-living arrangements. They might not be the traditional path, but they could be a perfect fit for some people, especially if affordability and flexibility are top priorities.
It's all about finding the right fit for your lifestyle and your financial situation,
Yeah.
not just following the status quo, right?
Exactly. And no matter what path you choose, always remember that total cost of ownership is paramount. Factor in those often overlooked expenses, property taxes, insurance, potential HOA fees, ongoing maintenance. Do all that before you make any decisions.
Yeah, it's easy to get caught up in the excitement of finding that perfect home, but understanding those hidden costs is absolutely crucial for making a sound financial decision.
You're absolutely right. The housing market can seem daunting with all its complexities, but it's also filled with some really exciting possibilities, wouldn't you say?
Absolutely. And I think that's a great point to transition to the investment side of this conversation. We've explored these housing trends, we've talked about their broader implications, but how do they translate into practical investment strategies? That's what we'll be digging into in the next part of our deep dive. Welcome back. We laid out some pretty big trends impacting the U.S. housing market, from rising mortgage rates to that persistent housing shortage. I'm curious, how do you see these trends playing out in the bigger picture?
Well, that's where things get really interesting, actually. You see, these challenges, particularly this housing shortage, they could actually be a catalyst for some real innovation. I'm talking about a potential shift away from those traditional housing models we're all used to.
So you're saying this pressure to meet demand, it might force us to rethink what housing even means in America. What kind of changes are we talking about?
Well, we might see a surge in what some consider alternative housing options. Things like accessory dwelling units, ADUs as they're often called, tiny homes, even co-living spaces. I
Huh?
know they might sound a little unconventional to some people, but they do offer a lot of flexibility. They're often more affordable, and they contribute to a more sustainable lifestyle, which is becoming increasingly important, especially for those younger generations.
Yeah, I can see the appeal, for sure, especially with costs rising and so many people wanting to live more sustainably. And speaking of changing demographics, we touched on the senior housing market earlier. Do you think that sector might also contribute to this kind of shift in how we think about housing?
Absolutely. We're already starting to see a move away from those large institutionalized care facilities and a move towards more community-based models that really prioritize independence and well-being for seniors. These communities, they offer a range of services and support, allows seniors to, age in place more comfortably and maintain their independence for longer.
Yeah, it's about creating a more personalized living experience, right?
Yeah.
Not just a one-size-fits-all approach.
You got it. And it's also important to recognize the role technology is playing in this whole transformation. Think about it. From smart home features that enhance comfort, safety, and energy efficiency, to advancements in construction techniques that can help expedite the whole building process, tech is a driving force behind a lot of these changes.
So tech is making homes smarter, greener, and potentially more affordable in the long run. It sounds like a win-win for everyone. But what about the implications for investors? Where do you see the most promising opportunities in all of this?
Well, as we talked about earlier, investing in those home building companies, especially those that are focusing on those high growth markets like Florida and Texas, that could be a really smart strategy given the demand for new construction. And as we discussed, the rise of senior housing, that definitely offers a compelling opportunity for those seeking long-term growth potential.
So pay attention to companies that are catering to the needs of an aging population.
Got add that.
But with tech playing such a pivotal role, are there any opportunities beyond just traditional real estate investment?
Oh, absolutely. You could consider looking into companies that are developing innovative building materials, energy efficient appliances, and those that are creating those smart home systems of the future. These companies, they're at the forefront of this technological evolution in housing, and investing in them could be a way to really tap into that growth.
Sounds like there's no shortage of opportunities for those who are looking to invest in this, evolving housing landscape. But what about those who aren't necessarily looking to become real estate moguls? What should the average person, whether they're thinking about buying or selling a home in the next few years, what should they keep in mind?
The key is to stay adaptable and informed. The housing market, it's dynamic, it's always changing. And the next 5 years, I think we can expect some unexpected turns. Remember those potential changes to mortgage rates we talked about earlier? Well, understanding how those impact affordability and financing options, that's crucial for anyone considering entering the market.
So knowledge is power. Do your research. But beyond just staying informed, is there any other practical advice you would give to those navigating this market?
I would say don't be afraid to think outside the box when it comes to those housing options. Explore those alternatives. We talked about ADUs, tiny homes, co-living arrangements. I know they might not be for everyone, but they could be a really good fit for some folks, especially if affordability and flexibility are top priorities.
It's about finding the right fit for your lifestyle and your financial situation, not just following the status quo.
Exactly. And no matter what path you choose, always remember that the total cost of ownership is paramount. Factor in those often overlooked expenses, the property taxes, insurance, potential HOA fees, ongoing maintenance costs. Do all that before you make any decisions.
Yeah, it's easy to get caught up in the excitement of finding the perfect home, but understanding those hidden costs is crucial for making a sound financial decision.
You're absolutely right. The housing market can seem daunting with all its complexities, but it's also filled with some really exciting possibilities, wouldn't you say?
Absolutely. And I think that's a great point to transition to the investment side of this conversation. We've explored these housing trends, we've talked about their broader implications, but how do they translate into practical investment strategies? That's what we'll be digging into in the next part of our deep dive. All right, welcome back to the deep dive. We've been exploring these trends shaping the future of the U.S. housing market, and now it's time to shift gears a little bit and talk about what this all means for investors.
Yeah, exactly. We've covered a lot of ground so far, but understanding how these trends actually translate into, real-world investment strategies, that's crucial, especially for anyone looking to, capitalize on this evolving housing landscape.
Because let's face it, for a lot of people, the housing market isn't just about finding a place to live, it's also about building wealth.
Absolutely. It's a huge part of it.
So let's dive right in and talk about those opportunities. What are some ways investors can actually leverage these shifts in the housing market to their advantage?
Well, we talked about the vital role that new construction is playing, right? Trying to meet all this housing demand. So one strategy would be to invest in those home building companies like D.R. Horton, Lennar, particularly those that are concentrating on those, high growth markets, places like Florida and Texas. That could be a really strategic move.
Yeah, it makes sense. Ride the wave of new construction, especially in those hot markets. What other areas should investors be paying attention to?
Well, we touched on this earlier, but the rise of senior housing and living communities, that definitely presents a really compelling opportunity. Companies like Amedisys, Lennar, they're already generating some pretty impressive returns in this sector. And that growth trajectory, it's only expected to accelerate as the population continues to age.
So basically, investing in companies that are catering to the needs of seniors, that's a smart long-term play. But what about the tech side of things? We talk about how technology is really transforming the housing market. Are there any investment opportunities tied to that as well?
Absolutely. Think about the companies that are developing those, cutting edge building materials, energy efficient appliances, and of course, all those smart home systems of the future. They're at the forefront of this technological shift in housing. And investing in them, that could be a way to see some pretty significant returns.
Okay, so we've got new construction, senior housing, the tech sector. It sounds like a diversified portfolio is key here. Any
Mhm.
other investment strategies worth considering in this kind of environment?
Oh, definitely. One thing to think about is REITs, real estate investment trusts. REITs are a great option for people who, maybe want exposure to real estate, but without the hassle of, actually owning and managing property directly. They offer diversification, liquidity, and they can be a really good way to tap into different segments of the market.
So REITs basically provide a way to kind of like dip your toes into real estate investing without having to, dive headfirst into property management.
Exactly. It's a lower barrier to entry for sure.
Sounds like a good option for folks who are just starting out or who maybe just want a more hands-off approach.
Absolutely.
Okay, great. So we've covered a lot of really interesting investment strategies, but are there any other general tips or things that investors should keep in mind in this, rapidly changing housing market?
Well, I would say one really important thing is to always stay informed about the regulatory landscape. Changes in government policies, zoning regulations, building codes, all these things can have a big impact on investment opportunities. So keeping an eye on these shifts, that can help you anticipate any potential risks and maybe even identify some emerging opportunities.
So knowledge of the legal and regulatory environment, that's key.
You got it.
Okay, any other parting advice for our listeners who are out there eager to, make some smart investments in this evolving housing market?
Do your homework. Due diligence is absolutely paramount no matter what you're investing in. Thoroughly research any opportunity, understand the potential risks and rewards, and don't hesitate to seek guidance from financial professionals.
Hmm.
A well-informed investor is usually a successful investor.
Couldn't agree more. All right, so as we wrap up this deep dive into the future of the U.S. housing market, what's the one key message you want our listeners to take away when it comes to investing?
Well, I think the housing market of the future is going to be defined by innovation, adaptability, and a willingness to embrace new approaches. Whether you're a seasoned investor or just starting out, understanding these dynamics and staying ahead of the curve, that's going to be crucial for success.
Well said. And I hope that this deep dive has equipped you, our listeners, with the insights and knowledge to navigate this housing market confidently. Whether you're buying, selling, or looking to invest, knowledge is power.
Absolutely.
All right, that's a wrap on this episode of The Deep Dive. We hope you found this exploration insightful. And we'll be back soon with another fascinating deep dive into a topic that matters to you. Until then, keep those minds sharp and those knowledge tanks full.